From the Florida CME Group, Tim Haefke, top-notch trading here on Monday, October 14th, Columbus Day, with Mr. Top Step Update. Well, right now there's still some confusion to the markets at hand. These guys are expecting to hammer out some kind of deal, and everybody's out there saying they're going to get something done, they're going to get something done. Well, they better get something done, and they should get something done. Come on, boys in D.C., you're grown men. You can't leave us hanging. And with what's going on in these markets, there's just no conviction to which way they really want to go. We started a correction, which I thought was going to be a better correction than we did, when we made those lows down to 1640 even in the S&P and 3111 in the NASDAQ. Boy, and then in 2 days, on Thursday and Friday, not nary a pullback, we see the S&Ps go from that 1640 half pit, 1640 even mini, all the way up to 1399 half pit, 17.0 quarter. That's a heck of a move without nary a retracement. And look what the NASDAQ did. From 3111 up to 3232, 110 plus handles. Give me a break. So if you can tell me what's going on, you'll be my hero, because I don't think anybody really knows what to expect, except there's going to be some closure. The markets need it. We keep seeing this wax on, wax off, wax off, wax on. It's evident when they settled at 99.30 on Friday, we were 99 even on Friday, they break 18, 19 handles lower on Globex in the S&P. And right now they're kind of in the middle of the range. It is quiet down on the floor. The interest rates, the currencies, everything's closed. Everything is not even open. They are trading some electronically, and that's at your own risk. It's really thin volume at this time. Now I'm just going to go back on a little bit of history for the S&P. I got them written down on my cards. During the course of this year, we are trying to attain all-time highs. We had the trend lines from 2000, 2007, 2008 that we needed to get above 1596. When the S&P accomplished that, on May 22nd, they made a high of 1670.75. Now, I'm giving you continuation points of interest. And after that high in May 22nd, they came back down and slipped under that 1596 trend line that was key to take us and accelerate higher. It was on June 24th, they got back down to 1547 quarter. What happens after that? They take a step higher. They make all-time highs again at 1698 half on August 2nd. On August 28th, they go back down to 1618 quarter. That is a key level right now, the 1618 quarter, because it just so happens to be a weekly fib objective from last week's regular session range in the S&P. So point this out right now, 1618. With that, though, they did bounce back and made new all-time highs at 1726.75, and that's the contract high in the December contract right now. But with the expiration of the September contract, the all-time high when September was still trading is 1733 quarter. So that 1733 quarter is an objective that they will seek if this market decides to turn around and rally into all-time highs again. That remains to be seen. Now, with that last high of 1726.75, I'm talking a little fast, deep breath. We got back down to this last low of 1640 even, mini 1640 half pit. But look at what they did. Here's a high, here's a low. Here's a higher high, here's a higher low. Here's a high, here's a higher low. So they are stepping up the ladder right now. And that's why the 1618 is just key. Now let's go to the bonds. The bonds aren't doing anything either. I'm telling you, I keep talking about the streamlining effects with the moving averages. They're even being seen in the indexes right now. But even more exemplified in the bonds. They keep moving up. There is no direct push to make these futures and the bonds go higher, or more direct to push them lower. They're in a range. I said last week we were looking for 133.24. They made a last week high 133.25. I'm looking for support at 131.29. They make a low 132 even. So moving forward though, I said the key point of interest was 134.04 up top in the bonds. That is a main target, and if they can achieve a bit above there, I believe they won't stop until 136.18. Below, we're still looking for support now. I'm not trusting the 29 as much as I used to. I'll be looking for 131.13 down to 130.23. That's it for today. Have a nice week, and we'll see you later on the next update.